See, all those who have Zerodha account, they must have got this notification today, which says if you have realized capital gains on which you have to pay taxes, you can reduce your tax outgo by selling any holdings which are in losses before March 31st. This is also called tax loss harvesting. We have a report on console that shows you the losses that can be harvested. So when you click on this link, it will take you to an article written by Zerodha, which is telling you the concept of tax loss harvesting, and the article also explains you how you can reduce your taxes before 31st March. So the purpose of making this video is to explain what is tax loss harvesting and how can you really reduce your tax liability before 31st March. So let us see the video further to understand what is tax loss harvesting and how we can reduce the tax liability. See, this is that article. When you click on the link, it will bring you to this article. Tax loss harvesting opportunity for fiscal year 2021-22. So this article nicely explains you what is tax loss harvesting, and it also tells you how you can reduce your tax liability. Now let me quickly go take you through the article in its important aspects. See, we have only two kinds of taxes when it comes to, let's say, equity or mutual funds. Short-term capital gains, at present we are paying it at the rate of 15%. So short-term capital gains is when you are holding equity or mutual fund for less than 1 year. And we are paying long-term capital gains at the rate of 10%. But up to 1 lakh it is free. So long-term capital gains we are paying at the rate of 10%. Long-term capital gains is when we are holding equity or mutual funds for more than 1 year. So these two kinds of taxes that we are paying. Now, those who are having, let us say, Zerodha account, those who have a demat account in Zerodha, they get this report in console. So this report is just for an example to explain the concept of tax loss harvesting. So in your report also, you will get these figures. Now these figures, these first figures are for equity shares. Now mutual funds figures are not there here. There should have been actually two images. So I have already written to them. See, this one image confuses because the numbers do not tally. So in my comments, I have already written. So if there are these two images, that is the numbers of equity and the numbers of mutual funds, then these numbers will tally. Then it becomes easy for the reader to understand. So what the article is saying that you can sell the shares of unrealized short-term capital losses. You can sell the shares of unrealized long-term capital losses. In both equity as well as mutual funds, you look into them, whatever that you wish to sell, so that you can reduce your tax liability. What it is saying is that in the above case, so when we take this case, the account has 1,37,000 as short-term capital gain, on which 15% tax rupees 20,550 is due to be paid. And the long-term capital gain of rupees 8,10,000, on which 10% tax. Now up to 1 lakh it is free. So less than 1 lakh, that is 8,10,000 minus 1 lakh. Now whatever 7,10,000, 10% of that comes to 71,000 is due. This investor can sell any of the stocks from the list in this report, book the loss, reduce the long-term capital gains and short-term capital gain, and save over rupees 91,550 in taxes. The investor would have to make this transaction before 31st March to harvest losses. So you can sell your shares out of this, you can sell your shares out of this, both for equity as well as mutual funds. Take a look and see which one you can sell. So this way you can reduce your tax liability. and this can go maximum up to, you can save maximum up to 91,550 when it comes to this case. So in your case, you have to see, each one has to see his case. Now the second strategy that is being suggested, this is an important paragraph. If you intend to hold these stocks and don't want to sell them, you can buy the stock back after 2 days of selling. So whatever that you're selling, you can buy them back 2 days, because that is the settlement cycle. When you buy or sell stocks, it takes 2 days for the stocks to be debited from your demand. So whatever the stocks that you're selling, you don't lose anything. You are in any way reducing your liability, and you can buy the shares back out of the same funds after 2 days. The second strategy is, you can also potentially sell your stock holdings and buy similar stocks in the same sector immediately. If you feel that the same sector that you're selling right now, you think that the sector has a potentiality, you can buy you can buy some other stocks in the same sector if you wish to. Now last para is recommending for a service. See, if you want to take the service of Quidco for your tax filing returns, I think Zerodha has some kind of arrangement with Quidco. They give them the discount, so you can take the help of Quidco to file your returns, or take the help of your CA. Or my suggestion always is, try to file your tax returns. If they are not complicated, try to file your tax reports on your own, so that you learn how to file your own taxes. So that is it in this video. That is what I wanted to explain you, what is tax loss harvesting and how we can reduce our tax liability before 31st March. Thank you so much for listening. That is it in this video.